Hocalarımız tekrardan teşekkür ederiz. Yıldırım, it's not easy going last, but the crowd is still very much interested in what we're going to be discussing. You're also an interesting panel because you are the only person in terms of the participant of the session who's physically here at the summit. All four of your panelists are going to be participating in this session remotely. So let me hand over the mic and the floor to you so you can introduce them and get into your session. Thank you very much.
I would like to start, Turkish in few words. Hoş geldiniz ve tekrar.
Welcome.
Hoş geldiniz.
Welcome again and again. And I'd like to thank Mr. Cengiz and Bosphorus Summit. I do believe it is an extraordinary panel because the investors couldn't travel these days. As a result, such kind of meetings are highly important.
I will speak in English for my invitations. Dear distinguished joiners, we have here from Luxembourg, I would like to present Mr. Raphael Eber, Mr. Vincent Linary, and Mr. Cornelius, he is joining. And from US, we have the invitation, I have here his marvelous company name together with me. I would like to explain Mr. Rehan Chaudhry, Global Alliance for the Century of the Fund. Today, we are going to talk about the general presentation about the investment funds. What is the investment funds? Why do we need an investment fund and all the details? Of course, it's not an easy subject. It is, today, I believe, the Turkey's #1 subject we can introduce. Why the investment funds are not present in our country today as it should be, why we are not in the same level of the investment funds which are generated and which are developed well in Luxembourg, in US, in China, all sorts of global investors, actually, the main players, why they are weak in Turkey. This is our main question. This is our main worry for our country. I would like to shortly introduce myself, what do we do? And then my colleagues will explain about more how we introduce myself. I'm running an investment fund in Luxembourg. And this investment fund, it is literally unregulated vehicle, we can say, but accepted by CSSF, which is the regulation of the financial area. So as behalf of on that, there is many investment funds in Luxembourg, in US, that they have this feeling, that they have this, how can I say, sense of development, better, larger, bigger investments. Today, our country, as Turkey, in a very important bridge position between Asia and I can say Europe and the behalf. There, when we call about US, Europe, that's a high and educated, well-educated consumers, around 1 billion people, what we are talking about. On the other hand, when we are talking about Asia and Middle East, well done since last 20 years, except especially on the behalf of cash generation, banking, finance, and all sorts of developments. This is why we will talk about a few moments about our global investment plans. This is why I'm letting first word to my colleague from BDO, Mr. Raphael Eber, generally introduce himself, and then we will discuss about the later the details between us, how the investment funds in Luxembourg, in different areas and fields, we will talk about it. And I believe I'm the only one who is having alone, having the panel that we are completely Zoom, my colleagues behind me. The reason is of the pandemic again, that return back to Europe, it will be 7 days of quarantine time. So we introduced that way, which I really believe and like, because everybody in this panels, they are with their heart, they are here, who are close, they are here, who are far away, they are from the other panelists as well. I congratulate by this. They are from the screen. So, Rafael, I'm letting you right now. Can you explain me about a little bit yourself and, of course, Luxembourg investments and the funds, please, first of all.
Yes, thank you very much, Yeni. Hope you hear me well.
I think we have a literally problem to hear. Can you little bit come to the microphone, Rafael?
Yeah, absolutely. Is it better like this?
Still not very well.
Can
you read? Yes, we can hear you.
Okay. So I will speak quite clear and loud. So it's a pleasure being invited to a Bosphorus Summit. It's a great honor, and thank you for inviting me.
Rafael.
So I'm Rafael Lieber. I'm partner at BDO in Luxembourg. BDO, I think it's quite well known and renowned firm with 92,000 people in the world and offices in 170 countries. What I am taking care of is the setup of investment funds and mainly alternative investment funds, and that's the topic of the day. Why Luxembourg? That's the real issue, because Luxembourg is a tiny little country, literally in the middle of nowhere, because we are stuck between Germany, France, and Belgium. This tiny little country is 600,000 inhabitants, so which is again meaning that we do not really have an internal market, so that we are extremely open to international. And this tiny little country happens to be the second largest place in the world for investment funds. So how is it possible that we are second just after New York? We have over 5 trillion of assets under management and under administration in Luxembourg. And the why are what you can see and witness on the right side of the screen. It is because we do have a AAA rating by S&P, Moody's, and Fitch, which gives comfort and confidence to investors as well as for asset managers. We are in the middle of the Eurozone, so Euro is a reliable currency. And we have highly trained and skilled staff, because we have over 150,000 trained and skilled staff coming from Germany, France, and Belgium on a daily basis to work in the financial service in Luxembourg. In fact, the authorities in Luxembourg have set up a stable environment to welcome investors and asset managers from throughout the world. So we have this flexible continental law framework, and this framework opened up the possibility to have quite a good toolbox for investment structures. And that's one of the specificities of Luxembourg, is that would you need any kind of investment fund or investment vehicle from the retail most, I would say, looked after by regulators to the less looked after by regulator. And that's the way I have the pleasure to introduce Mr. Master Vincent Linari from Linari Firm, and he will explain you how these vehicles, all these investment structures, can be used on a daily basis, and how we can help in order to structure your investment ideas and to make the bridge, the link between the investors and the investors. Master Linari, the floor is yours.
Rafael, as we are not hearing very, very well, I think there's a slight micro problem. If, I mean, to explain generally about the position of Luxembourg, the investment funds in Luxembourg, which is extremely important, we are talking about 5.5 trillion euro in assets under management. This is amazing. This is after US, what we are talking about, the largest European, second largest. You know, that's amazing how today we can say in Europe, I mean, in globally worldwide, as we are talking after US, isn't it? I mean, Luxembourg is taking a very, very high position. I mean, why? How? What do you think about? I mean, how that's possible? A small and a nice country can take that much important position to take 5.05 trillion euro in net assets.
Good evening, gentlemen. I don't know if you can hear me.
Yes, we can hear you.
Good.
Can you hear us?
Yes.
Yes, sir.
If you can just maybe close Raphael's microphone because we're in the same room, so there is a very big echo.
Okay, let me try on that. Raphael, can you close your microphone yourself, probably? Yeah, it will be much more easier for us. Yes. That's the technical aspect. All right. Mr. Vincent.
Yes, here we go. So your question, which is a very interesting question, how come a little tiny country like Luxembourg is today managing more than 5 trillion? It's historically actually quite easy. As soon as the first investment funds were created back in the 80s, Luxembourg, and it started initially and immediately to be interested into that kind of structure, knowing that would be the future. So Luxembourg has been working into investment fund world for more than 40 years. And this is explaining why we are so successful today that we have more than 5 trillion under management. The point is that obviously Luxembourg is offering a whole full-fledged service, which means that we can talk about UCITS fund. That's more for retail investors, financial securities as investment policies, and so on. And then we can go into more sophisticated world, which really developed massively over the last years, which is the alternative investment fund world. And there Luxembourg, again, is extremely specialized. Why do we use alternative investment fund? Mostly for private equity, real estate, commodities, hard assets like luxury cars, watches, gems, wines, horses. We also use it for fintech, venture capital. So this is really an investment policy which is extremely large. And based on that, we can also use the adequate toolbox. So maybe you, I don't know if you have more questions about the alternative investment fund world, but I think that most of the people know what it is. So maybe it would be interesting to introduce the various vehicles we have in Luxembourg, if that's fine with you.
Yes, but on the other hand, I have another feeling and question. I mean, as our discussion is general financing strategies, I mean, as we all know, I mean, it's between us. In French, we say entre quatre les yeux, I can say. Till 10 years ago, we can say, everybody can say, we want to invest into the Switzerland, to Zurich, and we want to go our funds over there, we feel more secure. And I feel, and I know that because of European Union and because of a global success of Luxembourg, all the funds in the world and big companies, they move to Luxembourg. I mean, how come Luxembourg take that position from many other countries itself? Is the main problem or main subject here is the security of the funds, or is it another alternative investments that they have been given to the investors on their investment, the ROE we are talking about? I mean, Mr. Cornelius, Mr. Bechtel, what do you think about that?
Well, I think it is. Can you hear me?
Okay, you should
Yes.
be able to hear me now. I think the reason for it is that Luxembourg has managed to play its role within the European community. It has been able to transpose the different directives that have been agreed upon by the different countries of the European Union into national legislation, and has been very active and proactive in doing it, and very consequential in doing it quickly. And I think that has contributed to the fact that investors as well as managers feel comfortable and feel secured working out of Luxembourg and working with structures established in Luxembourg. And the regulators who have a lot of experience at the same time have contributed to it as well, because they support the industry. They make sure that the industry is working properly, is working in a secure way, and that combined with the specialization, with the expertise of the different players, actors in the market, have contributed to the security and have made sure that Luxembourg is recognized on a worldwide basis as a secure place for investors to come into and to invest through, and therefore to have, let's say, the common playing field and level playing field for everybody to act upon.
Mr. Bechtel, as Anderson tax, I mean, do you feel that Luxembourg is a country that we can, of course, I mean, that shows worldwide today, people is already investing, already their funds are there. But do you believe it can be much more better integrated in the Luxembourg law system? Because as Anderson tax, your company is so important for the market, I believe. Do you feel that it can be better in coming years or coming period for investments?
I don't think it can get better. I think it is already very good, because Luxembourg has put in place a system which is harmonizing the different systems that are available. We're very often asked, is Luxembourg tax efficient? Is Luxembourg a tax haven? Those are the questions that are usually asked, and I let everybody else judge on that one, whether that is the case or not. But I think it is efficient in the sense that we are operating with a system that is common to every other country in the European Union. It is a high tax country. If you look at the corporate income tax rate, which is nevertheless close to 25%. But the way that investment income is dealt with, and the way that the way European legislation has been transposed into national legislation, allows for the structures to be very efficient from a tax perspective, and this makes sure that the asset in itself, if it's generating revenues, is taxed where it should be taxed, and that all the way through to the investor, you don't have any additional taxation, while still structuring the investments in a very safe way. So you have, between the investment and the investor, you have no losses, no friction, due to the fact that there may be additional taxes in there. And that's why Luxembourg is also a jurisdiction for the vehicles that allow to be gaining that and achieving that efficiency that everybody is looking for. Because I think, especially in today's time, return on investment, as you said in your introduction, is something that all investors are keen to maximize. And therefore, the structure that you put in place should not be eating up the returns that you're generating.
I see. is generally, I mean, I want to return back to the presentation. That's fine. But I have, I mean, as we have little time to go further, we are fine on that. Mr. Linari, about law, how do you think the facilities today Luxembourg is proposing to do investors? I mean, if I have serious amount of funds available by law, I mean, what are my main protections that I can invest into the Luxembourg, okay? And what is my protections on that field?
Okay, it obviously depends the kind of investment policy you're following, but generally speaking, you have various argumentation, either UCITS fund or alternative investment fund. First, you have funds which are regulated and supervised by our financial authorities called the CSSF. That's the first point, okay? They are extremely efficient, controlling, make sure that there are no issues and so on, because it's a very small country. Everybody is looking at us, so the CSSF is extremely efficient. Then you have extremely well-developed service providers around you. They are all regulated and make sure that there is not one man who can control the whole situation. There are always cross-check controls, 4I, 6I, 8I principle. The third point element, really important also, is that very often in the various structures, you have totally independent directors formed in Luxembourg, recognized and approved by the CSSF, who are making sure that the management is following the investment policy as dictated in the prospectus or in the offering memorandum. And last but not least, in most of our structures, you have the possibility to segregate the assets by creating various sub-funds, which are totally protecting one from the other, which means that if you invest in one sub-fund and for whatever reason it doesn't go as you expected, your assets which you have invested in the second sub-fund will not be attacked by that. So that's really the four main points, I would say, why in Luxembourg the investor is extremely well protected. And again, we know that this is the most important point, is that the investor has to feel protected by the structure in which he's going to invest. The only risk he wants to take is based on the investment policy. I hope that answers your question, William.
Yes, in a way, it is. Let's return back to the presentation. Mr. Rafael, what do you think about, I mean, the SIF, Specialized Investment Fund?
Yeah, hello. You hear me better now?
Now, yes, we can hear you. Yes, perfect.
Specialized investment fund. In fact, as Vincent said, we do have various kind of structures, and from the most regulated to the less regulated. So, first of all, to understand that these kind of AIFs are restricted for registered investors, qualified investors only. So they have to invest a minimum amount of 125,000 euros. Then there is no limitation within the asset classes. So it means that you can invest in whatever, real estate, private equity, hard assets, debt, whatever. It's quite easy to set up, and it is tax efficient. And I would like to give the opportunity to my colleague from Understand Tax to discuss a bit about the tax efficiency, because he has prepared quite a good slide. If you go to the end of the presentation, in order to explain, if you can continue to go further down, to explain how we can link Luxembourg with Turkey and with investors from all over the world. Would it be UAE, or would it be US or Asia or whatever? But we have prepared for this audience a good example on what would be the structure and how we should set this up. So Yildirim, if you have the chance to go to the end of the presentation, please.
Yes. Next. Yes.
Next.
Next. Yep.
Because in fact, these ones are for the audience. It is all the different kind of structures we do have in Luxembourg. And it's true that, for example, the securitization vehicle is a good example because we can understand the financing of any private equity or any other assets. We can go through the debt, we can go through the equity. So if we go for a fund, we receive a RAIF, an SCSP, it means that the investors invest into the equity of the fund, and then from the fund, there is the acquisition of the underlying asset. For a securitization vehicle, for example, it's quite distinctive. We go through the debt, so that means that the investors, they do buy notes, and the securitization vehicle will use these proceeds in order to finance real estate development, private equity, etc. So depending on the kind of underlying investments, depending on the kind of investors you have, we can structure the way you would like and the way would be the most appropriate for the investors and for the investments acquisitions.
Sure.
So if we can flip a bit further, we will show this example about, this is the limited partnership.
Yes.
It's
just
very similar to the one we have in the UK. It's the GP-LP structure, so I think this is well known by everybody. But if you can continue to flip, we will end up into some explanation from Cornelius Bechtel with regards to double tax treaties and withholding taxes, because it's not only one stuff to have the adequate investment vehicles to, I would say, collect money from investors and bring it to the investments, but as well it is utmost important to have the adequate tax structure. And you will witness that Luxembourg is quite efficient from a tax perspective. From various travels I had and discussions I had with private equity, large companies in Turkey, I understand that still good old days is to use the Netherlands as the jurisdiction of choice, but Luxembourg is quite, you have quite a good double tax treaty with Luxembourg as well. So if you can flip a bit further into the presentation, Yildirim, it would be highly appreciated.
Raphael, just to make it more understandable, because we know that you have perfect information about the creating funds and running funds and collecting the distinguished people here, you know, just I want that they understand involving to our subject, because they are all looking with a very interesting regard to us, because we are talking about one of the main and one of the most important subjects today. But to understand much more clear, if we have behind us BDO, if we have behind us Anderson, if we have behind us linear law, we can create one of the best funds in Luxembourg and start collecting huge amount from the investors. This is I really want that my participants understand that. I mean, why? I mean, after creating a fund, of course, we can go to the figures. They are extremely important. But why an investor should invest, even we have a very good project on our fund we have created, can be SIF, SICAV, SICAR, AIF, or alternative things, alternative investment vehicles, if we created, why the investors should invest, Raphael, as a general question I want to ask to you, should invest to do fund? I mean, what will be the aspect on that? I mean, if I have let's say a nice project for 1 billion euro, we are talking about serious amount and a good investment opportunity, why the investor will choose to invest into the investment firm?
Yeah, but indeed, it's the main topic. The point is how an investor can invest into a specific project. And it is just the way to help the investors to invest into a specific project, because it is not with every jurisdiction that you have the flexibility and the legal framework to create an investment vehicle. So it's true that for each and every country, you do have holding companies. That's quite simple. And it means that investors, they do sign the shareholder agreement and they do invest into a holding. But once they have invested into a holding company, a normal company, in order to sell your shares, you have to sell something else in order to make the liquidity, or either you have to find another investors who would like to buy your shares directly. So it's not so convenient for an investment purpose, because if you just want to have 1 or 2% of a project, you will not go into the specifics of a share purchase agreement and being part as a shareholder of a company. And that's the why of the funds, because these funds allows you to receive a net asset valuation report, let's say on a quarterly basis. And so you know what is the worth of your, I would say, the assets you have put into the fund. So if you start with a net asset value at 100, and after 2-3 years, the net asset value is at 110, it means that you have a profit of 10. And if the fund is liquid, it is easier to step out and some other investors can step in. As it is a fund, you have a shareholder register, and this is managed by the transfer agent. It's a specific function in Luxembourg, regulated as well. And the transfer agent is responsible to hold the shareholder register and to maintain it in good order. So to take into consideration subscriptions, redemptions, capital calls, etc. So it's about all the mechanics that is being offered in Luxembourg for the ease of the investors, because we are really there to ease the life of the investors and to ease the life of the asset managers. So the asset managers, they concentrate themselves on finding investors and on finding investments. And for the investors, providers like Anderson Tax, Yeni and BDOs and some others, we are there to help you and to make really the link between investors and investments, but in an easy and I would say the most easy possible way to refrain from any kind of extreme bureaucracy or unclarity, because it is what investors are looking for. They are looking for transparency. They are looking for, I would say, safety, to be sure that their money is well managed and safeguarded.
I see. Can you open a little bit NAV, net asset value, that we were talking about? I mean, what is the minimum or maximum it should be for funds that it will attract to the investors?
Net asset value is it is written, it is the net asset value calculation of the underlying assets. So that means that at the level of the fund, we have to do some mathematics and some accountings. That's why we are paying for, in order to say, okay, we have a real estate project, for example, and after 2 or 3 years, this real estate project has a different worth. So we reflect the difference in value of the underlying real estate project on the shares of the fund, in fact. So to reflect the evolution of the total value of the fund. And you divide it by the number of shares, And so you have net asset value reporting to each and every investors. I don't know whether that's extremely clear.
To make it more attractive, our panel, I want to ask Mr. Cornelius. I mean, we will continue with our agenda, but how does it look like from there to invest one of the Luxembourg funds or some investment banks or funds to Middle East or to Turkey? How does it look like over there? If there is a specific, because I want my participants that they feel and they understand, what is the perspective, Mr. Cornelius? I pronounce your name, I know, but it's a very nice name, and I'm repeating it. Just I really like the name. So how does it like over there from a tax level? Okay, if one of the investors say, or one very important fund or bank says, okay, I want to invest into the Turkey a serious amount of fund for a very interesting project. How the tax level works in that case, or what the fund need to do, I mean, for ending not paying high end taxes at the end, in a way.
Yes. Hope you can hear me, and then
yes,
please that my name pleases you, and it's great to hear it repeated. I think what is important, as I said earlier, is that you make sure that the potential loss or the return of investment between what the investor is putting in and what the investment is yielding as a return is minimized, and that you are ensuring that you are not losing any taxes in between. And that's why the structuring is so important. And as I said, responding to your question, if you are going to invest a larger sum into a Turkish project, obviously the Turkish project, if it goes well, is going to generate profits, and this Turkish project is going to pay taxes in Turkey on the profits it has made. But then you want to make sure that not only are you minimizing the taxes as you go out of it, but you are also anxious to make sure that all investors are treated the best way possible. And that's why you need to create a structure in between, which is as neutral as possible. And what we have tried also to put into the presentation is that you interpose between the fund and the target investment. You put what we call a Luxco or a SOPAR fee, which is a participation company, which is a fully taxable company in Luxembourg, but which is also the beneficiary to the vast network of double tax treaties that Luxembourg has concluded. But it's not only double tax treaties that are important, but it's also investment protection treaties that are important, because you want to make sure that when you do an investment, you have the security of owning that investment, but also being able to receive the returns from that investment. And depending on where you put this participation company, you have different rates of withholding tax, for example, for dividend distributions. As an example, from Luxembourg to from Turkey, to Luxembourg, the withholding tax, and according to the double tax treaty, is 10%, whereas the normal Turkish rate would be 15%. So you already have an advantage there by a reduction of 5% compared to what if I may say so, a normal investor would be paying, an ordinary investor would be paying. And then you have tax neutrality within the structure, because the Luxembourg company does not have to pay any taxes on this investment income, because it's dividend income, which is qualifying. And it can then distribute out to the investors according to the rules applicable to the investors, and not necessarily applicable the rules applicable to the Luxembourg company, because we want to make sure that the investors are treated in the most fairest way possible. And that's why it is so important to have the right structuring in place and to make the right decision about where you do locate not only the fund, as Raphael and Vincent have been talking about, but also the intermediary companies that are going to hold this investment. And there you have the advantage by structuring. And that's also probably one of the reasons for the success of Luxembourg, is that you have the entire toolbox in one country, and you don't have to deal with 15, to exaggerate, different countries, but you can reduce it, let's say, to 3 different countries: the country of the investor, the country of the investment structure, the fund and the participation company, and the country of the target investment. And that is reducing an enormous amount of complexity, and therefore is rendering Luxembourg for alternative investment structures and strategies so interesting. And that's why investment managers like you are looking at finding the right, let's say, the right setup, the right structure to move ahead.
So interesting projects. I want to return to Mr. Linari. It's a very important question. I feel that we want to feel here in Turkey. As a Luxembourg fund, do we afraid? That's very important. When we do investments for overseas, like Turkey, we can say in this case again, as we are in Turkey right now, do you feel that Luxembourg funds, are they, how you call this, not afraid, but feeling a little bit hectic to invest into the Middle East or in Turkey? Are they flexible to invest in a perspective of law, regulations, and investment fields? Are we going to, on our return on investment, what's the regulations between 2 countries, Luxembourg and Turkey, as a low level? By law, I mean, are they match enough for investment regulations?
Thank you, William, for your question. It's actually indeed a very interesting question. And my answer to that will be absolutely yes. Me personally, with our law firm, we work on a regular basis with Turkey. First, we have a very old, I would say, relationship between the 2 countries, which respect itself very much. We have a very good double tax treaty, as Cornelius mentioned it before. And above all, we have now also the experience to work together to make sure that the 2 cultures, the 2 approaches of maybe of business match very well together. So we see on a regular basis investors, and they feel very at ease because they know that if they go through Luxembourg to invest into Turkey, they know that here in Luxembourg, we know how it works. So we know what the risk policy is going to be, the investment policy, the people we need to talk to. So it works extremely well between the 2 countries. And this is also the same for the UAE. This is the same with Dubai. We are, as we said initially, an extremely small country. If we only live on ourselves, we would be growing potatoes by now, okay? What happened that over the last 50, 40 years, we have developed all this relationship with everybody. I mean, you won't find Luxembourg any enemy. We only have friends, business friends all over the world. So, and again, there is this know-how in Luxembourg, which makes it that it's actually very easy for us. I mean, if someone comes to us and says, oh, I want to create an investment fund because I'm going to invest in private equity in Turkey, for us, it's going to be, okay, we know how to do it, very easy. We know whom to talk to in Turkey to set up the whole structure easy and make sure that the investor feels comfortable and secured about it. This is, I think, one of the real big strengths of Luxembourg as well, to be able to talk to anybody in this world.
Before going to our agenda, Rafael, one maybe last question to Mr. Cornelius. Right now, at the current situation, are there more companies from Turkey going to Luxembourg for investing? I mean, at the paperwork as Anderson tax that you see, or more from Luxembourg going to do Turkey or Middle East in these parts? I mean, how do you see that today?
I think that is very easily answered. I think we see more Luxembourg companies going to invest in Turkey than the other way around, because as it was mentioned earlier by Vincent and also by Raphael, Luxembourg is a very small country, and therefore the opportunity to invest in Luxembourg assets is not so big. But you do have a lot of investors, not only Luxembourg investors, but you have on a global scale, you may have investors from the US, from China, from the Middle East, from other countries in Europe who are interested in investing in Turkey. And what they're looking for is, I used to call this the gateway into another country. And Luxembourg is offering this gateway because it is allowing you to collect the funds and then move into that country in a very efficient and controlled and secure manner. So to make the answer very short to your question, more from Luxembourg to Turkey than from Turkey to Luxembourg, but that is because the structure is based in Luxembourg. It doesn't necessarily mean that the investors are all coming from Luxembourg.
Perfect. It was quite interesting, actually, and important, this response. Dear Rafael, if we want to start up a good project, as Mr. Cornelius a few minutes ago he told, is that possible? Is there a possibility to pool investors' intention to invest as a hub, to use Luxembourg as a hub, to use investors' intention to invest into the Turkey? What do you think about, the possibility, as you're the expert of the funds and regulations, how does it work? How does it cease over there?
It's a good question indeed, but it's made on purpose. In fact, it's what I said with regard to the holding company and the difference between a holding company and a fund. The fund, by essence, is there to gather the investors and to put the investors into the same pot, and then to bring this pot to the investments. So yes, in Luxembourg we have the habit to make road shows and to go all over the planet to reach out to investors and to reach out to business angels to gather the funds, the money, to collect the money, to put it into.
Yes, I can hear you. Rafael.
I think if I may jump in here, I think Rafael's computer just crashed. I don't know if you can hear me.
Yeah, I think, yes, his camera is crashed. Mr. Cornelius, okay, we created an investment fund, investment vehicle. Okay, let's make it a little bit interesting here. My distinguished visitors here, I want participants, I want that they understand it very clearly. What is the position of the private investors, as we said, from China, okay, or from Turkey, because vice versa, let's think about it. What is the position today if, as a Turkish guy, which I'm a Turkish citizen, nothing to do with the European Union, what will be the investments I will bring into the Luxembourg, my facilities? As a tax, as a, where am I going to be taxed, the projects, or the moment I bring my fund? Let's talk about a decent example. I bring 25 million euro or 100 million euro, more specifically. I bring into the Luxembourg as set it up at or one of the investment funds, or I create my own investment fund. How will I get taxed over there?
Usually you will be not taxed over here because it is set up in such a way. That's great news, but that's the way it should be, because you will be taxed where you are resident. You will be taxed, if you're a Turkish resident, you will be taxed in Turkey. If you're a Belgian resident, you will be taxed in Belgium. And that is the big advantage of using these Luxembourg entities, because they are either set up in such a way that they can benefit from the various double tax treaties. So even if you were to pay taxes here in Luxembourg, the double tax treaties usually allow for credit of that tax in your home country. So you don't have to pay twice. So it's the avoidance of double taxation. And that is...
When I'm bringing the fund, you mean? The first time I bring my $100 million to Luxembourg, I don't get taxed in Luxembourg, I get taxed in Turkey, right?
You don't get taxed in Luxembourg when you bring the money in. And usually you don't get taxed if you start doing the investment. It's only once you start getting revenues, profits from
Revenues.
these investments that you start getting taxed. But if you're doing an investment, you're not taxed. We don't have taxation in Luxembourg on capital contributions or the like. I think that's very important as well.
I see. Mr. Linary, again, you know, we want to know more about the investment over there. If we invest as a Turkish citizen in Luxembourg, what's be the steps we will go ahead? I think Mr. Raphael, we need to put him back. Is that possible to involve Mr. Eber? Okay. Yes, Mr. I mean, what do you think about the steps we should go on whenever we invested in Luxembourg? Do we get a living permit over there, or how long does it take? Well, what's the circumstances in that period of time?
Okay, I'm going to jump on that. Well, the first thing is that the investor is going to determine is what do I want to invest? What is the investment policy I'm looking for? What is the strategy I'm looking for? Do I want to have a high return with a high risk? Do I want to have a low risk? Do I have to have my capital guaranteed and so on? So that's really the first point you're going to decide about. Okay. Obviously, it's highly always recommended to have a very diversified portfolio. Now, for a Turkish resident, once he's decided that, he's going to look, okay, is the structure based in Luxembourg? Very easy. You're going to do a clearance, so double check that first that investor is qualified, because as we said before, for AIFs, you have to be qualified to invest at least 125,000 euro or more. So that's the first point. And then there's going to be a double check from the AML KYC perspective that everything's fine, and that's it. And then you're just going to contact either the asset manager, the IFM, or maybe Raphael through BDO, and then you're going to proceed to it. So it's very straightforward. You don't need any specific permit. Again, to create your structure in Luxembourg is once you've determined what you want to do, then you talk here with professionals, and usually going to advise you the best way to handle it. So it's actually very straightforward. There's nothing complicated to start from scratch and end up investing in Luxembourg.
I see. I think Raphael, he's getting back, Mr. Eber. He said he's ready. The Luxembourg funds, what's the difference? That's a really sincere question I want to ask. What's the difference in Luxembourg between a fund and a bank? That's always I get the question from the investors. They are telling me, oh, I want to create a bank, I want to create a fund. Why an investor should create a bank, or why an investor should create a fund? Raphael, maybe you want to take word on that. I mean, as a perspective, you're the fund creator. I mean, that you're managing and creating and lots of services given. What will be the field if I have a money available investment possibility? Should I create a bank, or should I create a fund to give the financial services?
That's a pretty good question indeed. It depends on the amount of money you have. If you have a few billions, maybe you can consider creating a bank. But definitely, if we are talking about a few millions or hundreds of millions, a fund is by far easier to be set up and easier to manage, because to manage a fund at the end and you are well positioned to witness, it's not so tricky. You are physically based in Brussels, for example, in Yeni, and the central administration is in Luxembourg with the auditors, the lawyers, and the tax advisors. So in Luxembourg, we are all working for the fund, I would say the administrative part of the fund, and you from Brussels, you can take whatever decision to invest your fund's money into XYZ project. If you would like to set up a bank, that's quite another story. That's the why we have something like 200 banks in Luxembourg, but over 10,000 of funds in Luxembourg. So it's not definitely not the same size, but it's not the same purpose neither. A bank is there to collect money and to invest, I would say, client money into X, Y, Z assets, as well as offering some other services like credit facilities, bridge loans, or credit cards, whatever. The fund is really there to collect money from your investors and to invest into something specific. And this something specific is written onto your prospectus or limited partnership agreement and is saying, okay, we will invest into a real estate development or private equity or whatever you would like, the listed stocks and securities. But by far, it is easier to run a fund rather than to run a bank. And it's less expensive too. Running a fund, I would say it can start from roughly 35,000 all in a year. Running a bank, you can multiply this by 100. So this, I hope I have answered the question.
But I mean, in the perspective of investor, I'm looking for, if what gives more, of course, there's more funds than banks, but what gives more confidence to the investors? I mean, if I want to collect investor around, if I want to raise some serious amount of money to my projects or to my customer projects, what do you suggest or what do you feel is a fund, is an investment vehicle that's created for that, or we put ahead, we will create an investment bank that more for globally giving more secure feeling to the investor? I mean, what is the game over there? Why? I mean, me personally, sorry, I should say that, Rafael. Me personally, I say funds are created for investors.
Yeah,
okay, that's an investment vehicle. Bank is more holding the funds. You know, you can park the fund to investors, etc. This is another type of vehicle. Can you explain with few words? It's very important, the feeling over there. I mean, funds are more interesting than banks, I feel. What do you think?
Again, yeah, absolutely. But it's not the same purpose. A bank, you can do whatever you want. It's not really specific to have a bank. With a bank, it's every and all the investors are within the same pot. And then the banker decide, okay, I will invest your money, dear client A, I will invest your money into these assets B, C, and D. And for client B, it will be other kind of assets. For a fund, it is specific. It means that we take client A, B, C, D, and before they subscribe to the fund, we clearly state what they are investing in. So they are investing in either a private equity or a real estate or a debt or whatever. So a fund is specific about specific investments for specific investors. A bank is about gathering a whole bunch of investors and then asking them afterwards, oh, okay, what would you like to do with your money? So it's quite different.
I see.
And it's more secure. At the end, it's more secure to invest into a fund, because when you invest into a fund, at least you know where your money is going. When you invest into a bank, the bank can use your money to lend money to some other clients, and et cetera, et cetera. So it is not that specific. And so that's
very important.
Secure.
It is very, very important. So you're telling us that if the investor invests into the bank, he have, in a way, not a control of his fund. But if the investor invests into the fund, he have more control of, he can put his nose more, what's going on over there.
Yeah, because he has signed a subscription agreement and has adhered to a private placement memorandum. So he knows exactly where is he going. When you invest to a bank, then you give a mandate to the bank, and the bank will make it their own sauce. But here it is specific, and you know exactly what your money gonna be used for.
We have left 3 minutes. We will take each of one of you 1 minute each to last information I will ask. But again, if 3 of you known by people here, you can create a bank or you can create a fund. That's very amazing. I mean, I really thank you with this occasion that you joined this marvelous, distinguished participation from your side. I'm really pleased on that. If you can give with 1 minute, Mr. Cornelius, you can start up each of your feelings about your fields. It will be great. And again, thank you very much for the informations.
Thank you very much for the opportunity to participate in this panel. I'm extremely pleased to be with the distinguished speakers like Raphael and Vincent here. I think it is important to be able to transpose the message. Luxembourg being able to offer investment vehicles. It's not necessarily the strategies. I think for the strategies, you are responsible. You are the asset manager. You have the good ideas. You are the right man. But if you want to look at who can help you make it secure and give the comfort to your investors, to your clients, I think Luxembourg is the ideal choice for that.
Perfect. Mr. Linari? Mr. Linari, can you hear us?
Yes, I can hear you. So it's a very interesting question. Why create an investment fund rather than a bank? I would say from a practicality, there are 2 points I would talk about. The first, it's a question of time to market. Creating investment fund, depending on the structure you choose, can be very quick. Can take a couple of weeks, 4 or 6 weeks, you're up and running, and then you have investors and you can go invest into your targets. That's the first point. And the second, in most investment, what you have to be extremely careful are the costs. Creating a bank is going to cost you 25 times more than creating an investment fund. Plus, remember that the banks today are under the supervision of the central banks, have liquidity ratio obligations and so on. On the other side, an investment fund could decide, depending on the structure you choose, but could decide to go up to 200, 300, 500% of leverage, which means for 100, you can raise a 500 of debt. So definitely, if you want to be in the investment world and find an interesting target and make it really attractive to everybody, taking the equity and the debt side, you cannot compare the two. I mean, investment fund today is an extremely competitive sailing boat, whereby the bank is more something like a tanker, if the metaphor is acceptable.
Thank you very much. Raphael, last words. Your feelings and about these participants. Raphael, we cannot hear you.
I can hear you. Last point, I would say, would it be a bank? Would it be a fund? It is all about Luxembourg at the end of the day. In Luxembourg, we have this toolbox. And so you have understood, and I hope you have all well understood in this audience, that would it be quite a simple fund? Would it be a more sophisticated? Would it be a huge one? We are there to help and to create. And then to reach the goal, which is gathering investors and making the link with the investments. A bank is something more specific. I pretty adhere to a definition from Master Linari that it's more like a tanker. So it's a big machine. I would say banks love to invest their clients' money into investment funds, and that would be my last word.
Perfect. Thank you very much. I would like to invite Mr. President, Bosphorus Summit, here to thank you, and for the next coming, please, Mr. President, for the next coming events that will be very welcome as well. And he want to celebrate you, for the coming Bosphorus summits and all the your efforts. Probably we will visit with him Luxembourg to make it more large companies to bring into the Luxembourg. Here is the Mr. President. Thank you very much, and our participants, and it will be great. He can take us. Yes, it will be great to Luxembourg, and probably next visit will be over there to go for further more companies. Thank you very much. Thank you, Luxembourg.
Merci.
Yildirim, thank you very much for that. Thank you. Ladies and gentlemen, we'd thank you for your patience. We've come to the conclusion of this Bosphorus Summit. It's been 2 days. It's been full on 2 days, more than 20 sessions, 100 speakers, more than 100 speakers in total. It's not easy. It's not easy organizing something like this, especially under these circumstances. Therefore, may I please draw your attention to the summit's closing remarks, which will be delivered by the founder of the ICP's Bosphorus Summit, Mr. Cengiz Özgenci.
Değerli misafirler,
Distinguished participants, well, thanks to God,
ve çok sistemli
it was a very systematic Bosphorus Summit, and we came to the end of our summit. That's why we prepared a paper regarding the results. The 11th Bosphorus Summit, which was planned to be carried out on December 2020, and which was delayed due to the health security reasons, the Bosphorus Summit took place on 8th and 9th of March 2021. Differently from the previous years and due to the obligations arising out of the COVID-19, the summit took place with a limited number of attendants and took place in Istanbul Conrad Hotel. And at the same time, our summit took place on online platform. High number of speakers and panelists have participated in our summit online. 321 participants from 43 countries physically attended to our conference. We have 77 speakers who were physically present here, and 51 of our speakers delivered their speeches in online platform. And in a total of 128 speakers have been hosted in our summit. And according to our online assessments, the
katılma istatistikleri toplantının gerçekleşmesinden
after a while that our conference comes to an end, the crystal clear statistics about the participation will be delivered, but our projections are believed to be that more than 5,000 participants and audience watched our summit. So our summit and panels have been open to the broader audience, to the public, via YouTube channel. The main theme of this year's summit was living in an era of uncertainties. Unfortunately, the COVID-19 broke out after a small time that we have started preparing for the summit. That's why COVID-19 was one of the most important topic in our agenda. And most of our speakers have also stated that the whole globe is going through important times and transformation, and this transformation will be separating us from our past way of living, but unfortunately, what expects us is not certain in the future. That's why they have also reiterated that this pandemic speeded up certain transformation and weaken certain resilience, bringing along additional needs for the future. According to the opinion presented in this meeting, the countries are trying to tackle the problems which require collaboration on their own. That's why the nation states are trying to find solution to those bottlenecks and problems on their own or via regional clusters. The injustice and the is increasing and the trust environment is being deteriorated. If we continue like this, unfortunately, severe conflicts will take place. The classical capitalist system is focusing on profit maximization, which is being questioned, and as a result of that, the overuse of limited resources led to environmental degradation. That's why we have to question the issue of sustainability. The discussion regarding to the social responsibilities of the companies in the business world should be even further elaborated with the participation of many stakeholders. In addition to all of those, the technological advancements, especially with digitalization and dissemination of automation, brought along a common concern of unemployment in different societies. The economic competition has had a negative impact in developing countries, which brought along the immigrant phobia, xenophobia, and animosity against ethnic groups. Such political waves are threatening the internal stability of many nation states. In such an environment, the COVID-19 has led the economic life into recession, the poverty increased, and at the same time, the development of vaccines took time, and as the distribution of the vaccines were initiated, underdeveloped countries are deprived of those opportunities while developed countries kept those vaccines for themselves. And we also have seen that pandemic boosted certain transformation processes. For example, certain workers had a chance to work from their houses. From the banking transactions to the shopping, many people learned how to do those transactions by using their laptops and computers. And more importantly, the pathway for remote learning has been opened, and the studies on that field is ongoing, which is expected to yield permanent results. As the
yeterince oluşmadığından
old patterns are collapsing and the new patterns are not forming at the moment, there is no question that we are living in an era of uncertainties. So, in order to overcome those uncertainties, the international cooperation should be prioritized and put into the forefront of our agendas. In order to overcome those problems, we have to think globally, but the solutions which are being developed on the global scene should be filtered locally and put into practice. And any tackles and any barriers which will delay the realization of those targets will lead to unexpected results and undesired conflicts among countries. The 11th International Cooperation Platform final declaration was like this. Hope to see you in our 12th summit. May you all stay in good shape and health. Thank you.